Welcome to the Level Up podcast. This is episode 4. Today we're going to be talking about One Up on Wall Street, and I'm here with my friends Amr and Brenda, and we're going to be doing a deeper dive into the topic of idea generation.
The 3 big ideas in this chapter of One Up on Wall Street, I think, is that anyone can pick winning stocks, and you don't have to be a Wall Street analyst to do so. Another big idea in the chapter is that the best place to start looking for investments is in the tools and the products that you use every single day. That's where really good ideas come from. And then the last big point of the chapter that I really liked was to invest in spaces that you have an edge in. Maybe it's something within the industry that you work in, or it's a product that you buy at the store very often, because that's where you can really get an edge over Wall Street analysts.
You know, one of the big points that Peter Lynch makes is that basically anybody can be pretty good at idea generation, that you can use the knowledge that you have as a consumer or as a professional to come up with ideas. In your investing, Amr, has that proven to be true? And have you found this a useful way to find ideas?
I have. One thing I can think of is wind resorts. I was in Vegas, and I thought this was like a really well-maintained resort that everybody loved. Even if you stayed somewhere else, people went over to look at wind. So when I came back, I was like, oh, what is this about? Why is this investment resort so famous? I learned that it was one of the best, well-maintained holiday resorts in the world, and the then founder did a really good job of building up the brand image, and it was at a really cheap price, and we bought it then for our investment club.
So anybody can do idea generation, and in some cases, consumers will have an edge over professional investors. But I would say there are certain industries where it is more difficult to get an edge in these days. And as technology grows and data becomes more ubiquitous, mega hedge funds and mega investors are paying a ton of money to get that information extremely fast. One of the examples that Peter Lynch gives in the book is car sales. He wrote the book in the early 90s, and he was touting how car sales numbers are released every 10 days. Well, today, that's on a day-to-day basis. You know, they have that information on a day-to-day basis. So yes, there are certain trends that Wall Street analysts don't see that you have an edge over. And then in other industries, they probably have an edge over you. You just got to pick and choose.
That's really interesting. The one thing that struck me when I heard your comment is, you know, you're essentially saying that now it's even harder for the typical person to get an edge because the big boys have faster information, have access to faster information. Mm-hmm. I think the counterpoint to that would be, 20, 30 years ago, before there was, widespread use of the internet, the big boys had Bloomberg machines.
Yeah.
And today, information is basically a commodity, right? If you know where to look, you can find just about anything for free. So one could argue that actually that information asymmetry is a lot less today than it was 20 years ago.
That's very true, yeah.
There is also the other point, because when you look at Peter Lynch, he clearly talks about companies and industries that are big and that are small. So he talks about how big companies sometimes are followed by 50 analysts, but then you will be able to find a smaller company that is not followed by anybody. Mm-hmm. And again, you as a consumer have a huge advantage over the analysts and all the people with information, because this doesn't raise up to the level of their minimum bot to look at.
So in the book, One Up on Wall Street, Peter Lynch talks about 10 baggers. And he basically says that, his favorite company is one that has the possibility of being a 10 bagger one day. And that's defined as not being like 100% gain, but literally 1,000% gain, something that could go up tenfold. So that's obviously a massive number. Brenda, what do you think about this idea that he's advocating, that you should basically try to find these? It's not even a home run. Like a home run would be like a 4-bagger. Yeah. This is like a 10-bagger, a 2.5 home runner.
Yeah, I subscribe to that thinking 100%. I think I don't waste my time on analyzing companies that don't have the potential of becoming 10 baggers, because I have a limited amount of capital, right? And I have a limited amount of time. And so my investment horizon is 5 to 10 years. So I wouldn't risk putting my capital to work for something that's only going to increase 2-fold or 4-fold versus 10 to 100-fold. That's what I'm doing. So
Right. How about you?
yeah.
I mean, I always look for 10 baggers, but that doesn't mean I exclude the others. I mean, Peter Lynch talks about it in the book as well, but my thinking on this is the companies that have potential to be a 10 bagger are also expensive, especially if it is well understood. So then the price versus value becomes really hard to determine. So while I'm looking for them all the time, I rarely find them.
One of the really important points that Peter Lynch makes is that even though he believes that people have an edge when it comes to finding investment ideas, he makes it crystal clear that that doesn't mean you don't do research. I think that that's a common misconception that, you should, that's attributed to Peter Lynch, that you should buy what you know, and that just means, willy-nilly just going with it if you discover something. Brenda, do you have a thought on how much time people should be spending doing idea generation, and then what that relationship is with research and how much time they should be spending on research and analysis?
If you're talking about individual stocks, how much time you spend thinking up the idea for that stock versus how much time you spend analyzing it, right? The idea generation is a sliver versus the analysis. So maybe, 15% idea generation and the rest of it is analysis, if not less idea generation. But what you need to know about idea generation is that idea generation happens all the time around you. You're constantly generating new ideas. You're constantly in touch with the material world and coming in touch with new products or services or softwares that you're using. So idea generation never stops, really, to me.
I mean, I agree with Brenda on that, right? Idea generation never really stops. You are always looking for new ideas. The interesting thing is, you kind of have a mental model on what is acceptable to you as an investment. And if you find an idea meets that threshold, then you stop looking for ideas and you focus on that particular investment. See if you can understand it, if it is in your circle of competence. And if it is, then you just go further and further in until you either decide to buy or you decide to pass on for some reason.
Right. Speaking of circle of competence, I think Peter Lynch, he draws a distinction between two types of edges in this chapter. He talks about the consumer's edge, and then he talks about the professional's edge. Would you mind telling our viewers kind of the difference between the two and why he draws that distinction?
Sure. Let us talk about consumer's edge first, because I think it is a bit simple. It is, as a consumer, we spend lots of money and we buy lots of products and services. So we already do some research either because we like that product or it solves a particular need. So that is consumer's edge. And when you like something that you buy a lot, there is a chance that other people also likes it. And so you start looking at who is making this product. Is it a public company, right? And then you go further and further. And so that is consumer's edge. Professional's edge comes down to what do you do for your day-to-day job? Almost all of us have some day job where we go and specialize in an area. Because of that specialization, we come across tools and services and we understand the other companies in the industry and the adjacent industries. So that is professional's edge. So that knowledge that you have is unique to you as a professional working in that industry or company. And you use that to get an edge over other people who are outside of that market.
Next, let's talk about observation versus analysis. In my opinion, idea generation is all about observation. And it's different than the analytical part of the research process. Amr, have you thought about this? Do you draw that distinction? And do you agree with what I'm saying?
I do. Because observation is just looking at something without judging it, just to see what is happening. Because human minds take shortcuts all the time, right? So we overlook things. So I think observation is essentially to keep an open mind and even accept things that don't fall into your normal line of thinking. Whereas I think analysis is kind of the other way, where you actually then break it down and see how it fits into your mental model of the world. And can you break this problem down and understand how a company is going to grow or build a business or what their competitive advantages are, which is very different from observing, which is everybody I know is buying a Tesla.
Right.
Like there is something going on even though I don't understand the business or how this business is going to scale. Also, I think separating these two things is really important because otherwise you don't focus on some important growing company like Apple that you mentioned.
You know what? It's a really important point that you're making because a lot of people, they tend to assume that everybody else is just like them. Like, I don't know if you've encountered somebody, they're like, you know, company X makes something. It's like, oh, that's stupid. You know, nobody, there's no way I'd buy that. But as an investor, like your opinion really doesn't count. I mean, to your point, like the observation is, it doesn't matter whether you're interested in it. If like millions of other people are interested in it, then there's a chance that that company may be a worthwhile investment.
Yeah. Sometimes I try to do this mental model myself. If I have an immediate negative reaction towards a product or a company, maybe I should look into it because, you know, that strong reaction, other people obviously think differently than me. Lululemon is one example, right? Chipotle. I don't like Chipotle. I don't eat at Chipotle. Well, missed out on that one, right?
Right. All right. Well, that was a great discussion, guys. I think to wrap this up, there are a few key points from this discussion. The first is that idea generation is important. It's the start of the investment process. And the second point is that anybody can potentially do it. You don't have to be a professional investor in order to find great ideas. If you want more information, please feel free to check out Chapter 6 of Peter Lynch's book, One Up on Wall Street. On the next episode, we're going to be talking about the different company types, so stay tuned. If you enjoyed this video, please subscribe and share with a few friends. Thanks.